Hello there, guys. Let me just put a bit of background music in for you. How's everybody doing today? Welcome to the trading stream. We're going to be going over some charts of interest as per usual. I'm going to be going over the FX heat map, currency strength and weakness, anything that's really kind of popped out to us. We're going to be taking a look at. This US session might be a little bit of an interesting one, considering we've got Jerome Powell speaking and testifying in Washington this week, so we might see a little bit of movement around those types of sort of situations when he's talking and stuff, to see if he kind of comes out with any kind of stances on monetary policy. So we'll have a look at that as well. Hi Bruce, hope you're doing well. Welcome to the live stream today. Hello to everybody that's joining. I usually give it a couple of minutes or so before we get rocking and rolling, but if you do have any kind of questions, any charts of interest you really want to take a look at, then feel free to drop that into the chat, and then we'll go from there. But yeah, let me know how your day's been, what you've been looking at so far. I've just got the Asia range in here, so I'm just going to take these off for now. What I need to do is actually open up this, move chart forward. There we go. And then there we go. We've got the daily chart on the left-hand side, or the 4-hour chart, I should say. Daily chart on the left-hand side, and then we've got a 30-minute chart on the right-hand side. And what I typically like to look at, obviously, is the volume profile. So we can have a little look there. Let's just drop that down. There we go. I can have a little look at how today's trading session has gone so far. What can we potentially expect from the New York session or the America session? Hi Fiverr, looking at Euro Kiwi. What is your analysis? Monthly, weekly, daily, and 4-hour. Yeah, Euro Kiwi, interesting chart at the moment, I guess. We've got obviously a change in sort of a little bit of a change in terms of currency strength and weakness over the sort of last week or so, and one of that being the euro getting particularly quite strong. So if we just bring on the strength and weakness analysis here, what we're looking at is a euro that has gained quite significantly last week, and we've got a Kiwi which is also kind of gaining a little bit from an area of reversal, same as the euro as well. So Euro Kiwi could be a little bit range bound this week, but we'll take a look at it and have a little look at the details. Hi CG, hope you're doing well. Yeah, like I always go through, a lot of my analysis is based off of the currency strength meter as well. So we'll go through a little bit like that. Let me know. Can you see the currency strength meter, by the way, guys? I'm pretty sure you can, but I just want to double check if you can. Hi Tabo, hope you're doing well. I'll make sure that that's coming through okay. Showing up on my screen, so I'm assuming it's coming through all right. Pineapple, thank you as well. Yeah, we can. Brilliant. Awesome. Okay. So, yeah, essentially we've had a bit of a change round, haven't we? Like last week, it was the complete opposite to this. You know, we had a strong, a weak euro, weak pound, strong Aussie, weak Kiwi, and a strong US dollar. But that has really, you know, changed around, and that's largely to do with that sort of weak dollar that we've seen in the markets. Dollar was one of the weakest currencies last week, so looking to see if that's continuing this week or whether it's just a short-term flash in the pan. really of a reversal. So it's going to be a tricky trading week, I feel. Not too much in the way of clear direction. But if we go and have a little look at Euro Kiwi then, so Euro Kiwi obviously has had a little bit of a rebound recently, and even though Euro was one of the weaker currencies, Kiwi seemed to be a place where it benefited the most, and we had a little bit of a move to the upside here. And yeah, I like the idea basically of seeing a potential continuation in the short term. Now, I'm not a huge fan of buying Euro, I must admit, although that we've kind of had this strength in the market recently. I don't really feel that the underlying strength of the Euro's there. If we take a look at some of the data, we've got sort of poor manufacturing in Germany. You've got an inflation rate that's coming in a little bit lower. Employment's not the best. So in the Eurozone, they are looking more towards cutting interest rates or potentially holding interest rates from the previous cut. So I don't really see where the strength's coming from right now. I think it's coming from a little bit because of the fact that they didn't really see that the French elections, seeing the far right group and party come in and have a majority. I think if we did see that, then we'd have seen some Euro downside. That's just kind of the fundamental point of view. If you're looking at it from a technical perspective, if you go from the monthly chart in here, you can see that you're trading within, a little bit of a range. You've got the market kind of lows down towards this kind of 175 handle, and you got the highs around about this 182 handle. Okay, so I'd be looking to say that the Euro Kiwi from a monthly perspective is within a trading range here. If I just open the screen up fully here, we can go through a little bit. What I'll typically do if you are going to try and build your charts out is try and choose those kind of whole numbers to work with. The market does react to these kind of numbers, so I do always try and have a little look at the sort of half, quarter, or whole numbers. But yeah, Euro Kiwi at the moment potentially within this little bit of a trading range here, and we can see that we've broken last month's high, which was around about that 177 handle. Now, does that mean that price is going to move higher? No, it doesn't. It just means that we can base our theory off that the market may try and stay within this range from a monthly perspective. Okay. Now, what would it take? It would take obviously a really strong euro. It would take a really weak New Zealand dollar. And we've seen a little bit of a weaker Kiwi recently. Now, looking at the weekly chart, bullish candlesticks. We had a nice higher high, higher low candlestick form last week. We didn't get a close outside the previous high, which could show some signs of a slowdown, and we didn't quite get that. But we can see that potentially we are, trading within a range. We've got bullish candlesticks here, so this could continue to the upside. One thing that I would be really looking at is my 4-hour time frame. Okay, daily time frame not going to give us too much information in terms of that and the weekly. Although you can see that we're in that sort of retracement phase. You could argue that you've got a market that's making higher highs and higher lows, and is this the turning point? Now, if this was the turning point and the market was going to extend to the upside, perhaps up into sort of this zone of resistance, which I quite like the look of, considering the fact that that would be a very strong area of volume, because it was a consolidation within the market, so maybe up towards this sort of 179 handle. I would like to see what I would class as kind of like a change of structure here. And if you go to the 4-hour time frame, you're starting to potentially get this now, where the market has formed lower highs, okay, lower lows in the market. But what's happened is we've had a significant rally into this previous high. Now, if you're looking at trend moves here, the one thing that I like to look at, or one thing you can look at, you can measure it, right? So if I got a fib, go from the swing low to the swing high here, and just pop on the 786. Doesn't matter which way you do it. 786 is the same as the 236. If you get a close above the 786 on this downward move here, then the likelihood is that the market's going to change trend. The reason being is because that retracement there is almost classed, or can be classed, as a little bit too deep, and the market's basically, the momentum to the sellers is fading a little bit here. Okay, that's the way I look at it anyway. And if you go and research it, and you go and put on your charts, you put on your fibs and have a little look at when the fib closes above a 236 or below the 786, then you'll notice that a large majority of the time you get a reversal. So that's what I'm kind of looking at here. Now, we could argue as well that you're potentially forming a inverse head and shoulders pattern as well. Now, where do we usually see the head and shoulders complete? Sorry, let me just pop that back on there. So you got left shoulder, head. You usually see the right shoulder complete within that sort of left shoulder range. So if I was just going to grab the left shoulder there and just grab a little zone, you've got this sort of 7650 area. Okay, so that area to me looks pretty decent for a long. What I would typically do as well is have a little look at volumes within that move higher, just to see if there's any kind of areas that the market could kind of stall on. So what I would typically do is go from the swing low to the swing high on my volume profile, and I'll have a little look at where those volumes have been kind of coming in. So for me, actually, you've got a little bit of a higher zone in here, around about 176.60, which could be an area of support. What I would do, I'd look for price to come into that level of support in there. So we'll just zoom in a little bit so you can see it. I'd look for price to come into that level of support and just repeat process. I'll go down to a 15-minute time frame. I'd be looking to see if the 4-hour was going to continue within an upward trend. What would I typically see? I would see the market start to form higher highs and higher lows. So essentially, that's what I would look for. I would look for price to come into this zone of support, reject it, continue to drive higher. That's the way I kind of look at Euro Kiwi at the moment, because Euro, for whatever reason, is a stronger currency, and might not last very long, but it might. So you might see a little bit more of a more upside. Hopefully that answered your question, Favor. But yeah, going back to the currency strength and weakness this week, really interesting to me. The fact that we changed so aggressively makes me feel like these aren't necessarily figures that we should kind of focus on too much, in a way of they might not last. Because obviously as well, not too much has changed from a macro point of view, apart from the fact that the Fed might be interested in cutting interest rates. That's the only thing that we've really seen change. Obviously there's been more stabilization in the UK now because we've got a government. So essentially we had the elections, we now have a Labour government in charge. That could be positive for the pound just from a stability point of view. And then you've got French elections, that's now finished. French election didn't go the way as what was necessarily the fear was being projected anyway. So yeah, it's interesting moments in the market. But essentially what I look for then is we look at the currency heat map, and what I look at is momentum behind those currency pairs, and do they give us an idea of kind of trading this week. Now, only 4 currency pairs really stood out to me going into this trading week. We've got euro, US dollar, pound, US dollar. We have euro CAD and also pound CAD. Okay, so those are the 4 that I feel really have a chance. Now I am keeping an eye on a couple of others as well, because from a macro point of view, I quite like the Aussie still being strong, but we're just seeing a pullback in that at the minute, so we've got to just bide our time with that one at the moment. So yeah, these are the kind of currency pairs that I'm interested in at the moment. I'm interested in that sort of pound CAD, euro dollar, pound, US dollar kind of markets. We come down to the 50 moving average. There's a lot more that you could take a little look at going in here. From a 50 moving average point of view, you can see this is the change on the week. It's kind of showing us very similar things, to be honest. It's showing us that euro's getting stronger, pound's getting stronger. You've got dollar weak, CAD weak, potentially a Swiss weakness as well. And these are the kind of currency pairs that have been highlighted from that. So you're looking at sort of longs on pound, dollar, pound, CAD, pound, Swiss, pound, yen, longs on euro, dollar, euro, CAD, euro, Swiss, euro, yen, and longs on Aussie, US dollar, Aussie, CAD, Aussie, Swiss, and Aussie, yen. So if you want to take a quick screenshot of that, feel free. Fiber, WTI, oil, what's your analysis monthly? Yeah, I'll come on to that in a little bit, Fiber. I'll jump onto that. But we'll go over some other things first. Hi, Ratish. I'm doing well, thank you. Hope you are too. Hi, Just Nothing as well. Welcome to the stream. As always, guys, if you have any questions or anything, drop them in as we go along. But yeah, essentially, the 50 moving average is going to give you more trading ideas going into this trading week rather than the technical currency strength meter. But those are the kind of markets that we can have a little look at. So I have been looking at Euro CAD and Pound CAD, and I was looking at a potential Pound CAD long in the market on a very, very short-term basis. And we haven't quite pulled back to areas that I want to see. Now, again, I don't know whether this is going to be a bit short-lived or not. My theory behind CAD is that we're going to see some strength in the Canadian dollar simply because of the commitment of trade reports that we've seen recently. So we could be seeing a little bit of strength, but usually when you're looking at COT reports, it can take 2 or 3 weeks to even filter through into the market before we even see anything out of it, simply because they're lagging behind. That information is lagging behind in the market. And if we look at Pound CAD on a weekly chart, we've had a very strong rally. If we're looking at kind of where price could end up, we've got this really good resistance level that formed starting back in March 2019, where we've had a very significant level of resistance in the past. So is price going to go and target that resistance again? Essentially, are we going to start seeing a little bit of upside towards that area? In terms of kind of like immediate resistance, we had this sort of 175.63, which was tested as resistance recently. So got to be a little bit careful of this one for opportunities. But we had one of those classic patterns form. This is one of those patterns that we look at quite often in the market, where you get the market forming a base of resistance. But if you look at the lows, they're getting higher, and they can often lead to breakouts and breakout opportunities within the market. So I like the idea of being a buyer of Pound CAD on the very, very short term. So again, how would I go about trying to trade this at the moment? Well, I'm looking to see if price will kind of pull back a little bit. If I look at the daily chart, I'm just getting rid of some of these lines at the minute. If we go back and look at the daily chart, what's happened with price? Well, price has moved lower, formed a consolidation, again, volume, prices then dropped lower, formed a consolidation, broke out of the highs, and then traded higher. So we've had a big sort of movement of price pushing to the upside. Yesterday, we had a sort of bearish reaction towards the highs, but I don't think that's necessarily anything to worry about just yet. I'm actually looking to see immediate targets up at 175.50. So yeah, if I go down to the 4-hour time frame, all I'm trying to look for then is those kind of key areas of support and resistance to work with. Sorry. So if I grab a volume profile tool, we'll go from the swing high down to the swing low. You can see that we had this volume area in here, which was 174.36. Now, what's quite interesting about this level is, or this zone in here, the market completely ignored it. Okay, if we look at how the market reacted to that zone, it completely ignored it. Now, when that happens, when using sort of volume and volume profile tools, when that happens, that then area can act as support sometimes for price. So instead of it acting as resistance, the market might retest it on the other side, and then price goes to kind of push on to higher levels at that point. So that's what I'm kind of looking for here. So my first alert is at 174.36. I might actually round it up to 174.50 just to see if we can get like an alert before looking for an opportunity to the upside. My second area of interest is formed from the recent kind of swing move up, which is down towards 173.80. You can see volume being built within that consolidation. Again, if you're looking to trade markets, this is a classic pattern that we see time and time again. Base markets making higher lows. A lot of people probably trying to sell on these moves in here. That would be a rookie mistake. Market then breaks out of the highs and we see a condition that moves higher. So one of those patterns that I feel is useful within the markets is try and find a market that's forming a base. Okay, so let's say you've got an increase in price, forms a base or a level of support or resistance, and then watch how the market goes back to that support and resistance. Do you see the highs getting lower, or do you see the lows getting higher towards that level? Quite often you can see a breakout at that point. So that's just something, just a quick side note for you to kind of take a look at. So yeah, I am looking at what's going on here right now. I did like the idea of getting long this morning, and basically again I was looking at how the price reacted in this area here, because we've had a consolidation, the market broke out and we've pulled back down. Just not seeing what I'd want to see right now. You know, if we go to a 15-minute time frame, that isn't really what you want to see if you want to be a buyer, right? You know, the market's aggressively moved in, we're holding here. You know, it just doesn't make me want to sort of short that. I mean, go long on it. Essentially, you had this consolidation in here as well, which acted as resistance. So kind of just looking for a little bit more of a pullback. You know, I wouldn't mind seeing price try and come back down towards my alerts here, towards that 7440, and then look for the long on that in the short term. I mean, in terms of pound and CAD data, we've got GDP data coming up on Thursday. In terms of CAD data, we don't really have too much until next week, where we've got CPI coming out. So we'll wait to see how the Bank of Canada will sort of shape themselves for that, because they are expected to potentially cut rates again. So yeah, like the idea of potentially long in this market, but I don't think the technicals are quite there again. So for me, you know, I have the fundamental background, I have the sort of strength and weakness background, and then the technicals and my timing. How do I time myself into the market at an effective price? And I don't see that right now. Don't see that right now. Now, if I go on to EuroCAD, it's very, very similar, to be honest. Very similar. I like the fact that we're now breaking above the 50 MA here. We're trading to the upside. You know, everything's really kind of saying to me this market is starting to try and trade higher a little bit. Look at the daily chart. You know, we can see we're kind of making those new highs. Market almost formed a bit of an inverse head and shoulders pattern. This market is a tricky market to trade again. You know, look at the consolidation within these markets. But what I do like, again, is something that we've just spoken about all the time. Market has formed a bit of a base here at this 1.5 handle. What do you notice about the rejections? We have a rejection here, a rejection here. Okay, are we going to come up for another small rejection? Is this going to be one of those triangle patterns where the market then breaks out to the upside? Is that something that we're going to be looking at here? So from a higher time frame perspective, I don't mind seeing the market move high here. I think it's on a weekly chart, there's some potential scope for it at least. Looking at the daily chart, it's a little bit of a mess. It's a little bit of a mess. So yeah, just trying to, again, come to the 4-hour time frame. What do we see going on in the market? We've got this kind of move that's happened. Where am I looking to basically get in on this? I'm looking at the higher volume points. I'm looking more towards down this area, sort of 174 20s, 170 40s is the area I quite like. So I'll add another alert on here. But essentially, that's what I'm looking for. I'm looking for price to kind of come in a little bit lower. You got the 50 MA running through there as well. Could be a good point to be a buyer of EuroCAD. And I would be looking to potentially buy it up into the swing highs, or at least this sort of area here, 148.50. That'd be a nice area to look at, or even sort of a little bit higher up, potentially in this kind of 149s up in here. That's what I'd potentially be looking at. But from a currency strength and weakness point of view, these are the only sort of two that I like the look of. Or obviously as well, euro dollar and pound US dollar look pretty good. And euro dollar, I'm looking for 186 0 spot 8650s. I like the idea of potentially being short here. So I think I'm happy to be long euro until we get into this zone where I think we could potentially see a little bit of downside from that. It's going to be interesting this week, you know, if we look at the data that's coming out for the week ahead, you know, what's the real kind of key data points this week? It's Thursday. CPI data coming out. We've got core CPI, which is going to be a big one to watch. Again, remember, core CPI doesn't have the more volatile food and energy in there, so it gives you a more kind of idea of what's actually happening within the economy and within consumer sort of spending. So yeah, I'm looking at how this comes in. Now, it is forecast to come in the same 0.2%. So if we see any kind of upside misses on this, then I think the dollar's going to get stronger. I think the dollar's going to get stronger because the chances of a rate cut then comes in a lot lower. Okay, so that's why that's the way the market's kind of moving at the moment. It's trying to gauge whether the Federal Reserve are going to cut rates or not. And we've had a poor spread of data. You know, if we go look at sort of last week, and we can have a little look at kind of what happened there. Sorry, last week. There we go. Dollar data was pretty bad. You had ISM services, ISM manufacturing PMI, coming in at 48.5. That was a drop down from 48.7, expected 49.2. So we were expecting a little bit of growth there. Didn't get it, which disappointed markets. We then went on to the Federal Reserve chairman speaking and Powell speaking. Little bit of upside to the JOLTS job openings, but if you look at the actual trend of the JOLTS job openings, it's down. Okay, so the trend is down. These little spikes here won't really make too much of a difference to that. The market's just basically kind of moving to the downside, so it's not anything there. Services PMI was the big one. Services missed by a lot. You know, we're expecting 52.6, 48.8. FOMC meeting minutes as well. And then the biggie was the non-farm payroll number. And the big one was the unemployment rate rose to 4.1%. I don't think the Fed are going to want to see a 5% unemployment rate. So the closer we tick to 5%, I think is where the Federal Reserve are going to start pushing in on getting short or cutting rates, essentially. And that's what the market is trying to price in right now. It's trying to price in those rate cuts, and that is where the action is. So looking at sort of euro US dollar, to me, if we did see sort of a continuation up into this 108.50 handle, and then CPI comes out, let's say we're in this zone when CPI comes out, you know, that would be a good zone to short from if we did get a higher reading on the consumer price index there. So yeah, it's going to be an interesting trading week this week. There's not a huge amount of data. Data obviously drives markets, you know, so there's not a huge amount of data to try and get on. But I mean, look at this market at the moment. We breached 1.0760. We traded higher, rallied up. You know, I like the idea of being short euro against other currencies like the pound. It's a good market to look at shorts on euro pound, I feel, still at the moment. But yeah, we've had this kind of nice drive up, and it's how you capitalize on those type of moves as well. Looking at the sort of 4-hour time frame here, it's not looking the cleanest because we had the gap to the downside, but you know, I'm looking at potentially getting in if we can kind of hold this volume. Essentially, you could play the range here. You could play that range. The market kind of holds within this volume zone. You could try and get long from lows and take some profits off at the highs. You know, if we breach it, you've got more support lower. So, you know, but I like the idea of price kind of coming into this area here, this higher volume cluster, and then yeah, look to see maybe how price reacts in at that zone. Good afternoon, Vincent. I hope you're doing well as well. Hope you're doing all right. So yeah, the euro dollar's looking interesting. Pound US dollar as well. Yeah, I mean, look at that breakout and that rally. It's just, where do you want to get long on these? You're going to be looking at this hourly chart. There's a beautiful consolidation forming here, and if we get a breakout to the upside of that, that would be quite interesting to be a buyer of cable up to 128.50s. I've got a zone up there for whatever reason, but very similar to what we had over here. Consolidation, price breaks, closes above it, rallies. That's a potential trading opportunity there. Market holds here. Look for the potential breakout for a long on pound US dollar, looking at that 128.50, which was this high that formed back on the 12th of June. So yeah, very interesting market here as well for cable. So I'll keep an eye on that. I'm going to take a look at gold, and then we'll come back to Fiverr and WTI. So we'll come on to that in a second. So if you are looking for analysis on WTI, then stick around. We're going to go on to gold, though. Gold, an interesting market. I've actually been short gold today. Took about 50 pips out of it before looking for potentially another position. But essentially, we had a complete reversal of Friday's price action. So very strong move on Friday. Obviously, dollar data really compounded the move for gold higher last week. Monday completely reversed that Friday price action pretty much. So market undecided here. Undecided. If I was to put this on a 2-day chart, you'd be looking at a very nice rejection candle of those resistance highs in there. So you'd be looking at potentially for the market to try and trade lower essentially on that. So if I go back into the daily chart, how would I typically play this? Well, I'd be looking for a pullback. I'd be looking for a pullback to potentially get short. So what I was looking at this morning was this low in here. And I was looking to basically see if that low, which was support, turned into resistance, which it did. So I managed to get short around 123.65, came out at this area down here because it's volume. Market consolidated. Price is holding within that area right now. So it's an area of volume. Now, if I was looking to get short gold again, I mean, drop a message in the chat. Do you think gold's going to go short, or do you think it's going to go long? I'm looking at potentially another short up at this 123.72 handle. Overall, the reason being is selfish reasons, really. I'd like to see gold down here. This area in here. I'll just clone that up and pop that there. Is a high volume area from the week where we had when was that, the 1st of July until the 3rd of July. We had a nice consolidation where price broke out. Again, volume gets built up within those consolidations. We break out to the upside, market rallied. So I like the idea of potentially being a seller into this zone to then look for a longer term buy. I do like the idea of being long gold. We know that as long as price remains above this level, I like the idea of being long gold. But if I was looking at this now and saying to myself, where would I want to be long at? I'd want to be long down towards 23.40s rather than up here. So I'm looking to see if we can get a little bit of a pullback before a continuation to the upside there. Question, Vincent, what's your take on dollar Swiss? Yeah, I'll jump over to dollar Swiss after WTI. So let's go and have a little look at oil markets at the moment. Actually, fairly strong right now, oil markets. Market has been moving fairly positively. We've had this really nice upside move. We're actually coming up into an area of interest for me, which is this zone that had developed from the volume profile in this kind of $81.50 area. So I actually quite like the idea of being long on oil at the moment. Just seeing if we do find support within this area. So very straightforward price action going on here. In fact, downward trend coming in, market then broke that sort of trend, consolidated, moved away. So buyers push price out of this area, and now we're seeing a bit of a pullback. So can buyers that push price out of this area recently defend their long opportunities or long signals in there, so or long sort of trades. So I'd be looking at sort of price action down in here now, 4 hours pulling back. So really speaking, there's nothing for us to do right now. Probably look at this 30-minute time frame. Look at the slowdown here now. Perfect. You know, market is coming down. We've had aggressive moves to the downside. We're holding here. That is what you want to see. You want to see price slow down within a level and then look to potentially break out of that with some volume back in it. So I like the idea of just kind of sitting on my hands here now. I'll watch to see if we get a consolidation, and then if we break out of the consolidation, that's perfect. I'll look for a bit of a long move on oil prices. But at the moment, nothing really to kind of shout about here on oil, apart from the fact that it is coming back down within this volume area here and could start to rally back to the upside. But that's quite an interesting seasonal play that I was speaking to another trader about. And the seasonal play, usually we see a positive oil price through April and May, and we didn't get that this year. And typically, if the seasonals show downside in April and May, June to August can be very bullish. So I like the idea of following that, considering the fact that that is what's happened recently. The market has kind of made that bullish run. So yeah, I'm looking for longs. I'm looking for longs on US oil right now. So WTI for those that are looking to trade it. You've also got Brent crude oil as well that you could potentially be looking at as well. So that's kind of my idea there. If you're looking at it from a monthly, weekly perspective, then you've kind of got this monthly triangle pattern. Weekly to me is very bullish right now. Even the stochastics pointing up there, very bullish. Daily's just pulling back. 4 hour is pulling back as well. So I want to see some kind of buying coming in essentially towards these levels. Let's have a little look at dollar Swiss then, Vincent. I know you're a big fan of trading dollar Swiss, so let's go and take a look at dollar Swiss. Let's have a little look-see here. I mean, if we're looking at it from technical point of view, then yeah, this is great, isn't it? The market has broken through an area of resistance. It's come back up, retested it, starting to reject it again. So from a technical point of view, you might want to look to kind of be on the short side of this. It's just from the Swiss franc point of view, we've got a weaker Swiss franc according to the strength meter at the moment. We've also got a Swiss National Bank that is looking to have a weaker Swiss franc right now. So how do you play that in terms of selling this market? Because if you did sell it, you're basically buying Swiss francs. That's what you're doing. You're selling the dollar and you're buying Swiss francs. So do you want to do that at the moment? Not 100% on. From a price action point of view, though, looks pretty good. You know, we've got this movement up in here. Come up into the zone, we start trending back below the 50 MA from a 4 hour point of view as well. So I mean, if I was going to trade this short, I'd trade it a little bit aggressively. What I mean by that is, now that we're potentially moving into an impulsive phase on the 4 hour time frame, I'll be looking at my 15-minute and I'd be looking to try and trade the trend here. So anything like this essentially would be what I'd be looking to do. On dollar Swiss, look to potentially trade the break and retest of this kind of zone in here. You can see again what happened with price. We consolidated, price broke out of that consolidation, it retested, it went short. So all I'd be looking to do is wait for price to make its move, wait for a consolidation, and this is where you want to be focused, because that's giving you a potential alert. Okay, if price breaks out of it, then we look to get short. Very easy to kind of spot on hindsight as well, because you can see here the market rallied. What did it do? It went sideways. What did it do? It broke out. There's your long. Okay, market rallies, consolidates again. What happens? We break out. There's your long. Market moves, consolidates. What happens? Breaks out, moves to the upside. Okay, so all these kind of breakout opportunities here are where I'd be looking to do business with the market in terms of short-term trend trading opportunities, right? So that's what I'll be looking for here. Consolidation, market broke out. I mean, you could, in theory, sell limit that level, stop loss above the highs in theory. That's what you could look for. But those consolidation areas in there are volume levels. You know, if I delete all these off for a second, grab the volume profile, go from the swing low to swing high, these are all volume points, and they will be magnets for price. Price will want to go and test those areas. So depending on how the market reacts here, you might look at something like this into there, and then if it does continue to break down towards the lows, then you've got a potential opportunity for that to happen. I just think fundamentally right now, a little bit of a tough market, you know. I'd expect this market to range. I really would, considering you've got a weaker dollar and a weaker Swiss franc right now. That's my perspective anyway. I'll be looking at a range to develop here. You are welcome. You are welcome, Vincent. But yeah, it's going to be a quiet week, I think, in terms of opportunities. Like I said before, I'm going to try and build out a little bit more of a macro sort of look. Nat gas is starting to give a little bit of bullishness, which is interesting. I didn't expect this downside after the conversation we had about the heat wave in the US. Thought that would create a lot of demand for natural gas, and instead we've had a little bit of a sell-off here. But it doesn't mean we can't look at it if it comes a little bit lower. We might still get that demand out of it. Bond yields seem to be hanging around, not really doing a fat lot. You know, we've had 2-year bond yields just kind of come through this 4.6% level as well. TLT down today as well. Bitcoin trying to bounce back a little bit. Whether we get that or not is a different question. Afternoon, Matt. Hope you're doing well, mate. How can I get the volume profile indicator that you always use? If you have a paid plan on TradingView, you can get it. You can get it on other platforms too. So Sierra Chart, you can get it. I quite like Sierra Charts. So you can have a look at Sierra Chart as well. The problem with Sierra Chart though is you need a professional, a non-professional sort of setup there. You have to pay for the data and stuff. That's the only difference. You can get it on MetaTrader 5, believe it or not. You can get volume on MetaTrader 5. I don't think I have MetaTrader 5 open right now. Let me just see if I can get one. MT5. Let's go on MT5. I was using this for a video earlier, so hopefully it's still up and running. Oh, it's taking its sweet time. Okay. This was not the MetaTrader I was using earlier. MT5 or MT4? No, it looks like MT4 to me. Let's see if it's here. No, that's MT4. Where's the MT5? Is this the MT5? Let me just see if I can bring it up for you so I can just show you that it should, that you can get volume profile on MetaTrader 5. It's just really clunky. And if I start this up, you might hear my computer start going like a jet engine. So, right, if you go to insert, indicators, custom, and you want to just keep going down here, and basically instead of volume profile. Sorry, what you get is market profile. So market profile is a little bit different than volume profile. Market profile is almost to do with time rather than actual volume. So it's a very similar though. So in terms of how long a currency has stayed at a level of price, will give you a level to work with. Market profile arguably could be a little bit better than volume, considering the sort of I guess the difference between using a centralized sort of area to get your volumes from and X, Y, and Z. So if you go onto market profile, it just kind of brings up this, number of days to start the calculation and inputs and things like that. You can then see the different market profile levels within the Asia and the European session. What I tend to do is just kind of give this all the same. You don't really need to know what the individual sessions are doing unless you want to go a little bit of a deeper dive. But if I just click OK, this is what you get, right? So essentially on MetaTrader 5, you can have volume market profile. So like if you were looking at sort of zones like this, for instance, for the next day, that was a high area of the market profile. Price came in and rejected it. Market moved to the downside, for instance. You can also look at what's called single prints on a market profile. So I'm going for like a market profile webinar. Single print basically is where price moves very quickly with price. So the market profile here would have been this zone in here. And if you stretch that out, single print zones can act as really strong levels of support and resistance, basically because volume has turned very quickly at those points. Price hasn't stayed there for very long at all. And yeah, so you can get market profile on here. I actually think it's not that, it looks a bit clunky, but it's not that bad. If I just come into this again, so you can say a number of days if you want it to display for. So let's say you wanted to look at sort of a whole month, you could do like 30 days, or I guess there's like 25 trading days in a month. And yeah, you can just click sort of OK, and then it'll open all these up as well, right? So you can have that on your chart. Again, where does volume tend to sit? When it price consolidates. So that's what market profile does as well. It shows you a consolidation in here. And look, price comes into that zone there, rejects it, bounces away, right? So market profile, very handy as well. I didn't actually know this was on MetaTrader 5 until about 3 weeks ago, because I was just looking at the indicators through MetaTrader 5, and yeah, market profile was on there. So I think if you are interested in kind of dipping your toe into profiles without having to like pay for anything extra, then I think this is actually a very good way of doing that. Come onto the market profile. I'll just say you might need a computer that can handle sort of the big bandwidth that this will probably take up on your charts, especially if you've got lots of sort of drawing tools on here as well, lots of charts open at the bottom. But yeah, market profile, very, very good. You can see this kind of peak here on the day before of volume in there, or market profile volume, and look, price comes back into it, rejects it, moves to the upside. So yeah, if you do want to have a little look, you've got market profiles there on MetaTrader. Have I analyzed gold yet? I have had a little look at gold, but I can jump back on it, no problem. Matt, no problem at all. Vincent, what's your take on Kiwi, Dollar Shore, and Kingsley? Do you have a Trading View channel where you share some trading ideas? If yes, can you share your handle? No, I don't have a Trading View account. I do share some views and stuff via my Twitter page. So if you go to John Talks FX, sometimes I'll drop a little bit of analysis on there as well, so you can come and follow me on Twitter or X if you really want to. But Matt, you're looking for gold longs. Let's have a little look then. Let's go on to gold. Yeah, we kind of discussed the potential short, actually, Matt. Ironically, let's have a little look at. See, I'm now interested in putting on the market profile on here as well. So let's go and do that. might need to save these as defaults. Let's just have a little look. Just for fun purposes, we can have a little look at this. Gold. Put it on gold. Gold for gold. Let's see if this comes up on here. Now I can see hear my computer starting to churn a little bit. Let's go to a 30-minute time frame. Let's see if this helps. Okay, yeah, this is actually a really good example. You can see how slow my computer's going now. But this is a really good example of when price moves quickly between an area, you get this kind of build-up. You get the lack of volume, right? And those areas can be filled with price. Okay. But yeah, basically, Matt, I was looking at the potential shorts around this kind of 23.73 handle, or this sort of zone in here. Market's obviously been very bearish recently. I need to sort this out. I have quite a decent computer, and the fact that this can't handle that is interesting to me. Right, let's just do a 3-day one. Let's see if that helps. A little bit better, right? MetaTrader. Let's go back to TradingView. So yeah, gold. I like the idea of being bullish, sort of long term. I'd say long term, mid to long term. You know, I like the idea of being bullish. I'm just interested to see this sort of reversal that took place on Monday. So you had this kind of very strong bullish move on Friday, pretty much a complete sort of change around on Monday. Yeah, it's an inside candle, but we had a complete sort of change around to that price action there. So what I've kind of done is I've looked at sort of Friday and Monday's price action together in a way, and had a little look at sort of where the high volumes were. So up at this kind of 123.70 handle was where those occurred. Now, I like the idea of being long on gold, don't get me wrong. You know, for me, gold should be bullish in these type of market conditions. If we're going to see a weaker dollar potentially because of Fed rate cuts as well, then gold could benefit from the back of that. I like the idea of being long down here though. 23.40 is where I want to be long from, because this is the level that saw a large consolidation before seeing a move up. So I like the idea of being a buyer of gold, but I want to buy it down here. So essentially we could, or what I'm trying to do is look for a potential short to that point. And this is a zone of resistance. This 23.73 handle in there is a high volume level. If price comes into that and rejects it, we could see another sort of extension of a move down. So that's what I'm kind of looking for on gold personally. You know, I could be wrong. If price breaches that 23.75, breaches 23.87, then I'm definitely wrong, and the market could continue to push higher. And you know, I am wrong a fair amount of times. So just to let you know. So yeah, looking at price to potentially come up into this area here, could see a rejection and a little bit of a move down. So that's what I'm kind of eyeing up at the moment. I'm eyeing up that potential rejection there at 23.70. Vincent, what's your take on Kiwi dollar short? I have no bias at the moment on Kiwi dollar. I must admit, I like the idea of being short this market, and then obviously we had that aggressive sort of move. You know, I like the idea of being long in this 60.36 handle, and we didn't get it. Price actually came in and retested what was resistance as strong support, that 60.50 handle. And then we just kind of moved higher. So do I think Kiwi's a strong currency right now? Not necessarily. But is it a currency that I want to go and short against the US dollar? No. You know, dollar's very clearly on the back foot at the moment from a fundamental perspective. Lots of bearish data last week, and I feel like because of the lack of dollar news this week, essentially, we could probably see a continuation of that. So unless Powell comes out and says something shocking like we're not going to cut rates at all this year in the committee meetings, then I don't feel like we're going to see that dollar strength unless Thursday shows us a miss-higher on CPI. So don't see this necessarily playing out as expected at the moment. You know, if you look at sort of interest rates at the minute, you know, an easy way to do that, if you are looking at, you know, what the central bank rates are, just come onto your Forex Factory. Forex Factory have got a really simple sort of central bank rates situation here that you can go and look at. So New Zealand dollar 5.5%, dollar 5%. So Kiwi and dollar are at the sort of stronger levels there. The UK 5.25%, and then obviously you've got yen and Swissy and things like that in there. So if you do want to look at bank rates, you can. Similar bank rates, 5.5%, dollar 5.5%. You're not really going to benefit anything from a sort of carry trade here at all. So there's nothing really to kind of go off on that right now. The thing with Kiwi at the moment, I need to do a little bit more research into sort of where we're kind of expecting, but they do have a 95% probability of no cut in the next meeting. So we're likely going to see the RBNZ hold rates higher for longer here. If you go into New Zealand dollar, you can see the sort of latest changes there, and you can go on the graph and stuff, and you can see they've held interest rates since May 2023. Now, the purpose of that is obviously to generate a decline in inflation rates, right? So if I just go up here, I'm just going to grab, and this is, I can't wait to actually do my macro tour, because I hate having to just keep going out and looking at different sites and stuff. But if we look at the inflation rate, go to Australia and then go to New Zealand and have a little look at the inflation rate in New Zealand at the moment. We're coming down. Q1 in 2024 was down at 4%. Obviously not where they want to really see things. If we go and zoom out a little bit, you know, they want to see an inflation rate that's sort of more towards that 3% handle. You know, so they might hold rates higher for longer to try and bring those rates down a little bit. Now, that could be classed as bullish, right? That could be cast as bullish. If we go on to, let me go back into here, sorry, indicators again. You've got the inflation rate, the interest rate, GDP growth. These are kind of your main indicators that you can come and have a little look at. If you want to look at sort of individual stuff, you can come over here as well. So there's a ton of data that you can go through, CPI and things like that. One thing that I like to look at is the unemployment rate. You know, I don't like to see an unemployment rate necessarily too high. So again, if we go to Australia, see New Zealand, we increased to 4.3%. I don't think this is necessarily that positive. Was previously 4% up to 4.3%. But the thing is, what you want to do is look at where we were at sort of previously and see if that's kind of something that they would want to try and bring rates down on. I don't think it's at a level yet. If we look at sort of pre-COVID, we were hovering around 4.3%. 4.2%. So, you know, and then we had COVID and we went up to 5.2%. That's when they started cutting, right? And we're on a little bit of a cycle before that, I guess. Highest back in 2015 at 5.7%, where we saw some cuts coming into the market before. So yeah, I like I don't like seeing unemployment going upwards. I think that is a negative for a currency. But is it at a level that's alarming? No. And that's probably why the RBNZ are looking to kind of hold rates where it is at the moment. But Kiwi just across the board has been a little bit weaker recently, just from a technical point of view. So yeah, we'll probably see a little bit of a hold there on Kiwi more than anything. Could actually support it. And if you look at it against other markets, you know, if you go and take a look at what's a central bank that's cutting rates at the moment, the euro, right? Go to Euro Kiwi. I know we've already kind of discussed this in a way that it looks fairly bullish, but if you're looking at it from just a pure macro point of view, you'd want to be short Euro Kiwi because of the factors that you've got an ECB that are cutting interest rates, you've got an RBNZ that are holding rates higher for longer. So Euro Aussie, I like to the downside for that main reason as well. The RBA are actually more likely to hike rates in the next meeting than they are to hold it by 25 basis points, I think. Actually, sorry, 8 basis points. So yeah, there's a good chance that Euro Aussie could continue lower, but yeah, I'll be looking at sort of Euro Kiwi downside. Sorry, I just saw something popped up then. I just had an alert go off. Let me just have a quick look at my alerts just to see what's going on. See if there's anything I can talk to you through. Gold has just hit my alert a little bit to the upside. So yeah, I mean, wow. Let's go flick over to gold. Obviously, Federal Reserve Chairman Powell is speaking. I don't know if there's been any headlines from that. Let's have a quick look. So what time was he speaking today? Was it 3 o'clock? Federal Chair Powell testifies. So we've just hit 3 o'clock and gold just went through the roof a little bit before coming back down quite aggressively. Right into that zone. So look at it on a 5 minute. Came right into that 23.71 and rejected straight away. So, you know, I don't know whether he would have even uttered a word at 3 o'clock, or is that just it starting, you know? Let me have a quick look on Forex Live to see if they've kind of covered it in any way, shape, or form. Okay, yeah, so Powell testifies in Senate. Some headlines coming out from that. Fed Chair Powell, elevated inflation is not the only risk we face. That's a comment from in his opening statement. That's an interesting comment to make, isn't it? That is an interesting comment to make. Let me just bring this on the screen. So Forex Live, Fed Chair Powell, elevated inflation is not the only risk we face. So that's quite an interesting opening statement. I wonder what he's going to talk about there. So we'll see. Gold obviously fluctuated off of that and rallied a little bit before hitting a little bit of a level of resistance in there. So we'll see if that sticks or whether that is just a short-term area of resistance for price. What's your daily routine as a trader? Daily routine. So my daily routine starts at the close. So every night for me. So for me, it's about 10 p.m. The market closes. I open up my currency strength meter, update my currency strength meter as needs be. I'll then look across the currency pairs that I'm interested in, and I'll mark out some levels of interest, then set some alerts. And then I will wake up in the morning, see if those alerts have been tested, see if anything's kind of gone on for the night. First thing I actually do, it's quite funny actually. Let me know what the first thing you do is when you get up in the morning. Because I was talking to this with Jordan earlier, and I was like, first thing I do is I open my phone and I look at my Market Watch, which is like a news website, and I'll have a little look at any kind of headline news that have come out overnight, essentially. And I look at any kind of data that's come out that's interesting, that kind of, you know, would see any kind of movements in the charts that I'm looking at. And the next thing I do is I'll go and have a little sit down at the charts, we'll see what's moving, see what volumes are around. But yeah, other than that, I just kind of sit and wait. A lot of the time I'm just sitting and waiting for price to come in and test those levels before I do anything. I think it's I've learned my lesson from chasing the market very long ago. You don't chase a market that you want to get involved with. You wait, and you wait for an area that makes sense to you to get involved with. So I won't go and chase a market. I won't go and sit on a 2-minute time frame of a chart anymore. I'll just set some alerts and then walk away, basically. So yeah, and that one alert obviously was gold that just came in. So typically I would have shorted this move on gold, but it's happened so quickly I've not really had a chance to get short on gold. I know I'm on a 5-minute time frame here just to kind of show you the kind of move that's happening at the moment. But yeah, that's kind of my daily routine. It's not anything fancy. I'm a normal guy. I don't go and jump in a Lamborghini, and I don't go flying across the world and things like that. That's not the reality of trading. The most serious traders I know, you would never know that they're traders, right? You would never know. flash it in your face at all. And they're likely invested in other things rather than wasting their money on the fun stuff. But yeah, it looks like we got a rejection here right now. There's been some more sort of headlines coming out at the moment. Just going to read a few out. So, reducing restraint too late or too little could unduly weaken economy and job market. Oy, that's not a good sort of... I mean, it's just, again, it's confusing, isn't it? It's not straightforward, is it? I guess his job is to not kind of tell everybody where the market is going. His job is to react to what's going. But one statement here, which is quite interesting, is rate cut will not be appropriate until the Fed gains greater confidence inflation headed sustainably towards 2%. Q1 data didn't support greater confidence, and we continue to make decisions meeting by meeting. Labour market conditions have cooled but remain strong and not overheated. US economy is expanding at a solid pace. So, I mean, to me, that could be fairly bullish for the US dollar, right? Let's go and have a quick look. I'd say that's fairly bullish for the dollar in terms of he's not really giving you confidence that the market is gonna cut. That he's gonna cut. He's definitely. I don't think they're going to cut in. I don't think they'll cut in July anyway. This month, I don't think we'll see that. But they are potentially pricing in cuts for September still. So I'll be interested to see if that kind of continues to play out there. Vincent, I'm a nurse, so I mostly plan my day based on my shift. I check my charts when I get some free time at work. Yeah, I mean, this is the hard thing, right? And I would say this to anybody. Like, I would, you know, if I was to turn back the clock and do this all again, I wouldn't have quit my job so soon, right? I would have held on to it a lot longer. I actually think having an income can really help you get a lot further in trading. Because the way I would use it, or the way I use it now, is I use sort of my trading account as almost like a savings account. So I add to it on a monthly basis. I have a set amount that I add to it. And then obviously having an income is great because then I don't have to really touch it and I can grow it. And that's my sort of overall plan with my trading. I want to try and grow a pot as big as physically possible. So, and I don't necessarily want to have to rely on too many prop firms, just in case. Like we're seeing with a lot of them recently, they've been going down a little bit. So don't really want to have to rely on them too much. So that's my kind of overall plan with my funds. I also, you know, have a couple of other accounts that do a little bit of guesswork on, you know, maybe some big events coming up, like the elections and stuff. I'd have a little kind of go on those on just more of a riskier basis. But other than that, I just try and grow it as big as I can. But yeah, I don't see a problem in that. If anything, you'd want to trade higher time frames, right? So I'd be looking at sort of building a bigger picture plan of what a market could do, and I'd be waiting for higher time frame levels to be hit, and then I'd be trying to make my sort of whatever percentage target that you've got within that week. I'd try and make it in one of those trades, so then I could just focus on work and then, you know, have that as a little bit of a booster. But it can be super difficult because obviously this is what you ultimately maybe want to do. So yeah, you know, it can be difficult. Hi John, where do you read your news from? I read it from Forex Live. So Forex Live, I'll just drop it in the chat. It's free and they update you very, very quickly on what's going on. Obviously, it wouldn't be as quick as if you had like a news squawk or things like that, but news squawks are like £300 or £400 a month. So I'll drop that in the chat. Do I trade a pot firm account? I do trade a a funded account. Yep. Right, guys, I work 9 to 5, so I can only add to my account when I make a certain amount of money. Trading, is that something you do as well? Yeah. So essentially, what I do, like I said, I have like so I tried multiple accounts basically, and what I try and do is I have a larger personal fund that I try and top up like every month. So I'll have a set amount that I'll put in there every single month. Set amount that's come from income, set amount that's come from essentially, well, income that's come from a trading account as well, and I'll just keep putting that into that pot essentially, because what my ultimate goal is to not have to rely on sort of other people's money in terms to trade. So you want to basically have a pot that's big enough that you can live off, as well as what you can trade for a comfortable living, right? And you know, or whatever lifestyle that you want to have. So, you know, I'm going to build towards that as best as I can. But yeah, there's no, you know, no gimmicks with me around here. You know, there's no 400,000, you know, trading account and making 50k a day. You know, that's not the reality. My goal is to be long term with this, so I'm just going to keep building. And then you can go into other investments as well. In the UK, there are like, you know, different funds you can go into. Obviously, I don't know where you're based, so I don't know what's available to you. But you got like ETFs and stuff that you can go into, S&P trackers. You can even do crypto ones if you really want to. But I guess they've been battered this week. So yeah. But yeah, nice move on gold. Let's have a quick flick over to the dollar index. I just realized we've been going for about an hour and 10 minutes. So thank you to everybody that stayed this long, because that is an insane amount of time to be going over the markets. But dollar has been moving higher off of these remarks from Powell. Whether that will be held up or not would be interesting to see. Basically, he's kind of saying that there is not a lot of confidence in cutting rates right now, and there's not a lot of confidence seen in the inflation rate coming back down. This is where I'm reading it from, by the way, in here on Forex Live. But again, if we just flick over to countries here, United States, and we can have a little look at everything that's going on here. Unemployment rate obviously up to 4.1%. I think the labour market's going to be the straw that breaks the camel's back, is what the saying is. I think that's going to be the tipping point. If we see I'm gonna put my money where my mouth is. If we see a 4.5% here, I think we'll see a cut from the Federal Reserve. GDP growth, GDP annual growth, inflation rate. Yeah, so the inflation rate at the moment is still hovering around 3.3%. Now, when we get the latest CPI figures, it gives you a sort of a glimpse into what goes into or what we could potentially get in terms of the inflation rate year on year, month on month and whatnot. So 3.3% at the moment. They want to see that closer to 2%. As possible, and look how long we've been at 3.3% for, and 3%. It's since June of 2023. If I go out to 5 years, look at that. If anything, in the inflation rate is just not moving, and if they've got a labour market that's doing well, and they haven't got any movements in inflation, and really now we should be starting to see the real impacts of those rising interest rates, because we've had a significant move. We've now just kind of stalled, haven't we? We've stalled. So are we going to see any kind of downside revisions or downside moves in that? That would obviously be anything towards 2% is going to be great, isn't it? Everyone will then jump on the back of they're going to cut rates, stock markets will rally, dollar will weaken, things like that. But at the moment, we're just kind of stalling. Right then, guys, we've been going for an hour and 15. I don't usually go this long, so thank you for everybody that joined the stream today. It was a good stream. I enjoyed going over the markets with you. I didn't think I'd be able to go over that much, considering there's only kind of 4 pairs that I'm really interested in at the moment. So yeah, thank you for everybody that joined me. Thanks for everyone that asked loads of questions as usual. Really appreciate you coming to take a watch. If you could leave the stream a like, it's free. It lets me know that you like the information that I'm providing within this. You know, I hope that you get a good blend of kind of fundamentals with technicals and how you can see how that helps form trading ideas. That's my goal with this. So yeah, thanks for everybody that's kind of watched today. Really appreciate you all. Like I said, if you could leave a like, I would really appreciate that as well. And I will catch you on Thursday, 2 p.m. Cheers, guys.